Welcome to TradeNameData.com. This is John. This report is for the 8th of January and just moved straight to the 50K here as we expected pullback fill for the positive extremes that were right there and then also began right here at the beginning of this breakout, which we figured right around that 69.50 range, and that's about where we just dipped a little bit below that. And right back at it on the pop up. It was a little bit above where the previous algo level was, but right within the range. We had the MBI weight that had spiked here that happened the day before that was leading a nice progression going forward. But we had this steady decline here. Our blue and gray line said once we broke down below the 25, that was the beginning of the end for it. That was just a matter of waiting for that completed spike to just really drive things all the way down. But it was pretty clear once you had the break below the magenta, right below the 25. I thought it might start earlier in the day when we hit it right here, but it turned around and it gave a little brief pop, and that was just one last hurrah for the Bulls before they started to pretty much sell strong inside of it. You could see it was a much lower shakeout for the higher high, and that was the clear indication that it just was not going to survive at all. Let me go ahead and look at the 5-minute chart from there, and you can see how that went. Early pop, second much lower, unable to do it. Some people would call that a head and shoulders, but not really applicable for those constructs. But it was pretty strong from a 5-minute on the MBI weight, and that just led to the move to the zero, and then it maintained itself by having the MBI weight lead. As we look into the Asian session, more of the same. Europeans tried to get a little bit of juice back into things, but at the end of the day, you've just got issues with where things are at economically. Geopolitically, the situation is stagnant. Whether the Venezuela thing plays out with the oil, that's going to take time. These things are all delayed, and because of that, it just pushes more towards the midterm. So what you're going to get from there, and you saw the narrative that's going to play out from there. It's going to be about fraud and the abuses, and it's not going to happen quickly. It's going to play out over months so that you get your final culmination just before the election. Everyone's really angry about how many billions are just thrown away, and basically there'd be no deficit if you didn't have all fraud and abuse. Okay, fine. From a crypto standpoint, that doesn't do anything for them. That the interesting ones about BlackRock and corporate housing buying up individual single-family homes. Trump's playing the populist role correctly because a lot of those things are a net negative for valuable economic growth. And the reality is, you want to shift not just from government control, but you also want to prevent non-productive, capital, and actually having individuals in homes that own them and are fixing them up and doing things is a lot more beneficial economic activity than having any corporation do it. From a gold standpoint, though, again, there's no change in the spending. It's just going to continue. Eurozone, they're starting to realize how bad things really are, and it's not going to get any better. They're not going to be able to get the Russian assets. They can still borrow a ton of money, but now you got Denmark threatening to go to war with the United States over Greenland, and how is that going to work? And this is where, unfortunately for the EU, it really presents themselves as a paper tiger, and that becomes problematic because then they just lose all credibility. And if the U.S. wants to take Greenland, the U.S. can take Greenland, always could. Are there better ways to do it? Of course, you can negotiate these things, but it's all about the leverage game and reestablishing a Monroe Doctrine construct, and then simply because he couldn't get any action taking place from the Ukraine net, and he knows that he needs lower energy prices in a significant way. This isn't enough to make a difference. And I've been saying that for the better part of a year. Just not enough. So plain and simple. Will it impact treasuries, things like that? Not so much. The Fed's in its own malaise, and until a new chairman's picked, it's sort of a lame duck Fed in that sense. Governors just trying to vie to see if one of them can get the top job. From an NQ standpoint, you can see still at the peaks. I mean, this wasn't horrible or anything. It didn't really affect the daily pretty much at all. You did see some short increase rise, but kind of muted the nice dip below the orange line in that. But that tends to happen. It can take 3 to 5 days for that to really start to spike at all. So we'll see how it plays out from there. But you reach the peak of the highs and then trade it off them. So still within the same range. No objection to all of that. All pretty much as we thought it was going. That's long and the short of it for now. As always, anything relevant, I'll let you know. Have a good one. Trade well.